But I think that you're setting up for a bigger move in silver. It's lagged tremendously. It's starting to get, exciting here. And if we can break this 34.50 area, I think you could be headed to 38 over the next month or two on silver. So there's some good upside here. I do like the chart. The only thing, again, we always talk about, okay, well, how does my pattern setup fail? I wouldn't want to see silver getting back below this 31 level. If it gets below 31, it's probably going back to 28. But as long as it holds in this range, upside bullish bias on silver. This here, very clearly this low right here around 3,100, we would want to see that hold to maintain this bullish consolidation. And then eventually we want to see a break of this trend line, which then should send it back to 3,500 and beyond.
Recent developments in the precious metals market have brought renewed focus to silver, which appears to be entering a stronger phase of relative performance compared to gold. While gold has traditionally been the dominant asset in this space, favored by central banks and widely viewed as a safe haven, silver is beginning to assert itself with increasing technical and fundamental support. Chart analyst Gareth Soloway highlights that silver has recently broken through a significant resistance range, suggesting growing momentum. This shift occurs at a time when broader commodity markets are showing signs of recovery, and silver's dual role as both an industrial and monetary metal may offer investors a valuable diversification tool in a changing economic landscape. Gold continues to benefit from structural support, particularly from ongoing central bank accumulation that accelerated after Russia's removal from the SWIFT financial messaging system in 2022. This geopolitical event catalyzed many countries, especially in emerging markets, to diversify reserves into gold as a hedge against currency vulnerability and political risk. However, Gareth Soloway notes that gold is currently in a technical consolidation phase. After a steady rise in the early part of 2025, prices are now trading in a tighter range, reflecting near-term indecision. Despite this pause, the long-term bullish structure remains intact, supported by macroeconomic uncertainty and sustained institutional demand. In contrast, silver is gaining traction due to its critical role in high-growth sectors, including solar energy, electric vehicles, and electronics. Unlike gold, which benefits mainly from monetary policy trends, silver's demand is increasingly tied to industrial innovation and the global energy transition. Gareth Soloway notes that the current technical pattern in silver indicates a shift toward a more bullish structure, with potential price targets in the $38 range if current levels are sustained. While historically more volatile than gold, silver may now be positioned to outperform, particularly if broader commodity strength continues and investor interest broadens beyond traditional safe haven assets. This evolving dynamic suggests that strategic allocations to both metals could enhance portfolio resilience in the months ahead. Now, we present the clips from Gareth Soloway's interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates. Thank you, and enjoy the video.
So number one, I like silver down here, and I'll tell you why. You got this V bottom in silver, and then you went into this period of consolidation. You can see the lows here, the highs here, and we have just recently broken out. So you've broken out. Now, there is going to be some resistance around 34.50. That just comes from this high pivot to this high pivot. But I think that you're setting up for a bigger move in silver. It's lagged tremendously. It's starting to get, exciting here. And if we can break this 34.50 area, I think you could be headed to 38 over the next month or two on silver. So there's some good upside here. I do like the chart. The only thing, again, we always talk about, okay, well, how does my pattern setup fail? I wouldn't want to see silver getting back below this 31 level. If it gets below 31, it's probably going back to 28. But as long as it holds in this range, upside bullish bias on silver. You do look at them as part of the equation, but as a pure technician of the chart itself, you're really looking for what we call price pattern in time. So patterns replicate over and over again, as do prices. Now, what we do know is that certain things can get outweighed or get kind of wacky in the system, whether it's hype on gold or hype on this or whatever it may be. So those type of past histories can be a little offset, but there's usually an equilibrium that they come back into. So you want to be very aware of them, but at the same time, for me, it's all about that price pattern and time factor on the chart. So gold right now, and we can see this is the first time really since the start of the run in early 2025, where it just kind of went nonstop to the upside, a couple little pullbacks along the way. But this is now the first period where we've actually seen it making kind of lower highs and short-term lower lows, right? So it's the first period of what we would consider to be digestion or consolidation in the chart. Now, one of the things that I've been focusing on is this line here, this upsloping trend line here, and then this pivot top. And notice how we came down recently. We pierced this line here, and then we rallied up. And then look at where we got rejected today. We hit this on Friday. We came right back in today. Now, overall, a lot of people would say lower highs, lower lows. Is this a bear, essentially a bearish move or the beginning of a down trend? The answer is you still have low, higher, a higher high, or higher low, higher low, higher low. So the longer term uptrend is still intact. This is, again, would be viewed as bullish consolidation, meaning that it's consolidating before another move to the upside. The only thing that you have to watch as a technician, and remember, I'm a big gold fan. I love gold, and I still think it's going higher. But as a technician, I always have to be aware that there are levels that need to hold. This here, very clearly this low, right here around 3,100, we would want to see that hold to maintain this bullish consolidation. And then eventually we want to see a break of this trend line, which then should send it back to 3,500 and beyond. But right now, listen, the chart remains bullish. I mean, it's consolidating, but it's consolidating in a bull flag. It looks like it wants to eventually break to the upside. And if we think about it logically, right, you have all the factors, right? This new tax trade bill or whatever they're working on in Congress. I mean, supposedly it was going to cut all this spending, and now they're kind of backpedaling and saying, okay, maybe not so many cuts, and let's expand this and give more tax cuts. And ultimately we're hearing now that this is going to add trillions and trillions and trillions of debt, which is just more fodder for gold to go higher, right? These alternative, stores of value. So that's again, those factors I think continue to be good for gold.
Recent tariff tensions, particularly involving the EU, have created notable ripples in the market, influencing precious metals in nuanced ways. Initially, the EU issued firm tariff threats, which raised concerns about a possible escalation in trade conflicts. However, within days, those threats were softened, and the original timelines were restored, signaling to investors that these tariff announcements might be more about posturing for negotiation than immediate action. Gareth Soloway points out that this pattern of aggressive rhetoric followed by quick retreats has started to undermine the perceived seriousness of these tariff threats. Despite this, the uncertainty created by such geopolitical moves tends to support gold prices as investors increasingly seek a safe haven amid these tensions. Even when tariff fears momentarily subside, gold remains resilient, benefiting from ongoing concerns around trade disruptions, inflationary pressures, and broader geopolitical instability, which all contribute to sustaining its appeal as a store of value. Silver's response to tariff developments, while connected to gold's safe haven status, diverges due to its dual role as both a precious metal and a critical industrial input. Silver's price movements are influenced not just by investor demand for safety, but also by expectations about industrial demand and global economic growth. Trade tensions and tariffs can cast a shadow over industrial sectors, including manufacturing and renewable energy, where silver is heavily used. This limits silver's upside potential compared to gold during periods of tariff uncertainty. Gareth Soloway emphasizes that silver, being more volatile, typically holds a smaller share in investor portfolios and reacts more sharply to economic shifts. If tariffs were to escalate, disrupting supply chains or increasing costs for industries that rely on silver, the metal could experience more significant price fluctuations.
I think there's something happening here where initially when Trump surprised everyone with the dramatic tariffs that were labeled across the board, people were kind of left in shock. And that's when we saw that massive decline in the S&P 500. But since then, he started to roll these back and he'll make these threats, right? He'll say 25% tariffs on Apple, 50% on the EU. And then what we saw with the EU threat, which was just on this past Friday, by Sunday, he had already rolled that back and gone back to, oh no, we'll wait till the normal July 9th deadline that we had already set. And I think people feel the same way about Apple, right? Is that, he's threatening this, but ultimately he will go back on it because he doesn't want to kill the market. He doesn't want to kill one of the leaders or the champions of the US market, being Apple. And so I think these threats are starting to look like they don't have teeth. And the market is sniffing that out and just saying, hey, listen, if he does this, just buy the dip, it'll go right back up. So the markets are starting to price in that he won't do anything, which means the markets are actually vulnerable if he sticks to his guns at some point. And we do have these deadlines coming up in June and July, or late June into July, where there has to be supposedly deals done. The question, again, in my mind, and this is what the market is thinking, is saying, okay, if a deal isn't done, will he come out and say, oh, we're close, so we're going to extend it by 30 days? And, essentially moving the goalpost. And that's what the market is supposed to, or starting to believe. The question is, does he hold firm? And then we all get the shock of a big down move in the markets. Well, and he has to, in a weird way, if he starts to realize that the markets aren't taking him seriously, he almost has to reestablish dominance. It's almost like the Federal Reserve, right? The Federal Reserve for the longest time was kind of backpedaling and doing this and this, and no one believed that they were ever going to hike rates. And then they finally had to be like, no, we're going to do this, and they do it. And then the market's saying, oh, okay, well, they're serious about this now, and they'll kind of make it into the equation of how valuation should be. But again, right now we are seeing the Trump effect kind of losing, at least the power of the tariff losing its luster. I think it's been a culmination of just the outlook on tariffs getting a little less bad. And I think a lot of the younger generations, which joined in kind of right around COVID, is when a lot of people that hadn't invested prior decided to get into the market. And so they're really seeing that, oh my goodness, this market had pulled back significantly, right? And we're looking at, again, when you drop 20 to 30% on the NASDAQ or the S&P, historically, at least from the point where a lot of these Robinhood type investors have been in the market, that's been all you've gotten. And then the markets, again, have turned around. And so you're getting to this point where you're getting the greed, the FOMO, the fear of missing out, to really get the point where people just rush in and these younger generations dive in. They don't remember, and listen, I'm not super old, but I still went through 08, 09. I still went through the .com collapse. I mean, the NASDAQ, we have to remember, in the .com collapse, did not make new all-time highs for almost 15 years. And so in that respect, people that are newer investors, they haven't gone through long-term bear markets. And I think there's this tendency to just say, hey, this is the best we're going to get. We're not getting a deeper pullback. The Fed will come out with bazookas. The government will do its thing, and we're going to be off to the races again.
Many analysts across the commodities and precious metals space are increasingly pointing to silver as a standout opportunity, projecting it as one of the most undervalued yet high-potential assets in the current financial environment. Unlike gold, which remains a popular store of value, silver is drawing heightened attention due to its affordability and its expanding role in industrial sectors tied to the green energy transition. Analysts highlight that silver is not only within reach for the average investor, with many emphasizing that nearly anyone can afford at least a single ounce, but also primed for a major price breakout. Several projections now place silver reaching as high as $70 an ounce in 2025, effectively doubling from its recent levels. As financial markets grapple with inflation, de-dollarization, and geopolitical tensions, a growing consensus among experts suggests that silver will outperform both gold and other traditional hedges in the short to medium term, offering a rare combination of safety, accessibility, and industrial growth potential. That's it for today. Share your thoughts on Gareth's analysis in the comment section below. If you find this video informative, don't forget to support and turn on notifications to stay informed about our latest videos. See you in the next video. Thanks for watching.